this one. Okay. Hello. Good afternoon to you all. Welcome to the Inter-American Dialogue. We're very glad to have you here. Today we're going to talk about remittances in what is our traditional event of presenting our prior year numbers here at the Dialogue. We have a wonderful panel this afternoon. First, we have our own Manuel Orozco, which I believe you've probably all seen, our authority on remittances to Latin America and the Caribbean. He started this program over 20 years ago when remittances weren't as sexy, to quote him. And now it's gone upward in popularity. We also have Akinyi Ochieng from WorldRemit. She's the corporate communications manager and also part of the research and communications team. Thank you so much for joining us. We have Usman Ahmed, who is from PayPal, owner of Zoom, which is one of the major companies. He's the head for global public policy at PayPal, and he also teaches law and does several participating in groups. And we have Jean Nigro, who has had a long career in the remittances industry through major companies. He's worked, I think, in all of them at this point. And also, as you see, a very informed panel. And I think it's going to be wonderful to pick your brains about what we're seeing in the marketplace right now. We're going to start out with Manuel, who's going to present part of the results from this article that we're presenting today, and then we'll open to discussion. Manuel.
Yes. Ahora sí. Right? Can you hear me? Okay. Well, thank you very much for coming. This is our annual report on remittances. We released a fact sheet about 2 months ago, just to give you a heads up of how remittances continue to grow to Latin America in substantive numbers. We basically, what comes across first is, if you read the entire report and you have questions, that's great. There are like over 17 tables or something like that, and even I was shocked at the number of numbers that are in that paper, because I think there are more numbers than actual words. But it reflects a lot of the research we have been doing on Latin America, but particularly it reflects, I think, one of the most important trends that is happening in the Western Hemisphere, and is the growth, the substantive growth and relevance of human mobility in the Americas. And as we will see, there are important trends taking place that signify the human dimension of international migration, but also how mobility, it's becoming a really important piece of the pie of the integration of Latin America into the global economy, particularly not only in terms of how labor migration is actually significant for the Western Hemisphere, but also in the sense of how technology is being enhanced through mobility. So we're going to give you more or less of a review of some of these issues with regards to family remittances. I think there are three main stories behind the report that reflects what's going on in the Americas with regards to international migration and family remittances. The first one has to do with the actual growth that increases the flows to 10%. And that increase predominantly comes from key countries that have been experiencing different kinds of important developments. We're talking about the Central American countries, not only those of the Northern Triangle, but also Nicaragua. Nicaragua, for example, is the country that exhibits a 7% growth in remittances and is the only economic indicator in the country's economy that actually exhibited growth. Nicaragua's economy actually dropped by 4% because of the political crisis, the repression-led political situation since April 2018. So it is telling of that sense, but also you have other countries from the Northern Triangle that exhibit basically 10-digit growth for Guatemala and Honduras in particular. And then you have Colombia and Haiti and Mexico exhibiting significant growth. The question mark about Mexico in particular is how do you explain growth in the context of declining migration from Mexico to the United States? Colombia, it's also another question mark. What do you make sense of a country that has been stabilizing politically yet is exhibiting significant growth? And Haiti is definitely a case study of what we are arguing is taking place and shaping most of international migration from the Americas, which is the role of state fragility in the 21st century and its effect on migration. So that's one side of the story. The other story is that we see a significant growth in remittances in the south-to-south context. There is significant south-to-south migration, not only of Haitians to the Dominican Republic, but also Haitians to other countries like Chile in particular. And that growth is actually reflecting important trends. More importantly, perhaps, is that we find that at least 2.5 million transfers are occurring within the southern region in the Americas, and that comes to represent more than 3 million transfers, monthly transfers in remittances, and that represents near 20% of all inbound flows to Latin America and the Caribbean. So the south-to-south transfers are actually growing in importance as a regional remittance market. And it's reflective of different trends. One of the most important ones has to do with the issue of human mobility, not only labor mobility, associated to state fragility. Haitian migration is one. Venezuelan migration is another one. We have done several studies in four South American countries, and we basically learned that there is a significant flow of money coming from places like Colombia, Costa Rica, Panama, Chile to Colombia. And our estimate is about $3.3 billion in remittances to 2 million households in the country. That's quite a figure considering, the history of Venezuela in terms of its limited migration until very recently. And then there is another important issue that we have been following and we wanted to highlight, and that's the role of technology. We have been following digital transfers to Latin America, globally, but particularly to Latin America, since more or less 2005. And first, we were dealing with the inflow, the use of card-based transactions, the use of credit card or store value cards. Later on, the emergence of the web as a platform for sending money. More recently, in the past 5 years, the role of mobile device applications for money transfers. And since 2006, where we did surveys in the U.S. outbound to Latin America, the percent of people using any of the type of what we call internet-based transfers was really insignificant, was less than 0.5%. And now, when we look at it, we find out that actually the growth of the use of digital transactions, in particular mobile devices especially, has increased significantly. So we provide a case study of 3 countries, Mexico, Guatemala, and Colombia, which are the 3 largest remittance recipient countries in the Western Hemisphere. And we find that the growth is quite substantive. For Mexico, 1 out of 3 transactions are now occurring through digital platforms. And it's quite a volume. It's more than 2 million transfers of money sent through companies like WorldRemit, Remitly, Zoom, in particular, or Western Union. The growth of Western Union, for example, in the past 10 years, has occurred predominantly in the digital market, not in its cash-to-cash revenue base. The Western Union's growth in cash-to-cash actually hasn't been that significant, even at the transaction or at the volume level, but it has been quite large in the past few years in the mobile context. So what we see is that the volume of remittances continue to increase significantly, and it's a growth that is observed due to different trends. Perhaps the single most important one is the role of migration as a byproduct of state fragility. There are 8 countries in particular that are significantly growing in migration, but also are demonstrating that increase through the sending of money. And they include countries like those of the Northern Triangle, Haiti, Venezuela, Cuba, and Nicaragua. The other story is that some of this growth has been actually capitalized by intra-regional markets. Particularly, the most significant and telling and fascinating story is that of the market in Chile. Chile was not really a country where migration was that significant. We only knew about Peruvians going to work in Chile. But over the past 5 years, there's been an exponential growth. There are over 80,000 Haitians in Chile and more than 200,000 Venezuelans in the country. And that's a number that is increasingly growing at various levels. The first story we heard was actually the inflow of Colombians going to Chile, but now it's a bigger picture to the extent to which the country basically is hosting over 1 million people in Chile, and we estimate about 750,000 person-to-person transactions to families in some of these countries. So this is a really important story to understand that, again, when we talk about remittances, you are talking about human mobility, and specifically the human face of that mobility as resulting not only out of labor mobility, but also resulting from state fragility in several of these countries. Of course, the issue grows in importance today as we're looking at the trends in Central America and how remittances continue to grow with continued migration. But there are some interesting developments going on within those stories. For example, one has to do with how the growth of remittances to Mexico, to illustrate this, is more associated to the number of Mexican migrants in the United States sending money than to migration from Mexico to the United States. That is, as they realize that going back to Mexico doesn't represent a major opportunity to them due to the fact that the likelihood of returning is much more difficult. So they are choosing to stay, and that's increasing the pool of senders of money transfers. The same pattern is being observed with the case of Central America. Although the news gives the impression that there is a huge inflow of Central Americans coming to the United States, the actual number is not that large. And in terms of net migration, we're actually witnessing a negative net growth. So, but yet the remittance story continues to show significant growth. And that's quite an important element, because for all of these countries, remittances represent at least 10% of the country's GDP. So any change in economic growth is associated to the growth in remittances. For the Northern Triangle countries, for example, and definitely for the case of Nicaragua, half of the region's GDP is associated to the growth in remittances alone. So if you make any changes into migration policy or in the migration patterns in general, you will be affecting growth in the region without any replacement at hand. So I think those are some of the main findings of the report. There are some specific issues that we'll be very happy to discuss. The one other story with regards to the role of technology in money transfers is that we definitely find an association between the ubiquitous nature of technology, especially social media, the use of WhatsApp, for example, and sending money transfers. People who send remittances are more likely to be WhatsAppers than people who send remittances through digital devices than those who don't. And it may seem kind of, it's the kind of thing that when you hear it, say, oh yeah, I knew that. but, nobody really has looked into it in detail. So we've been teasing these issues out, in that regard. And the other point is that on the receiving side, there's still the digital world is not as large as is happening on the outbound. If, for example, at least we were to generalize for all of the Latin American remittance recipient countries, we will be talking about 20% of flows going digital. But for these three countries, it's over 30%. On the receiving side, is still under 5% of all flows being deposited into accounts or into digital store value devices. It's a work in progress. I think Latin America will set the pattern on many of these issues relating to the digital money revolution. And I think Colombia is one good example of it, how over 20% of transactions to that country alone are being deposited into bank accounts. But we're seeing the silver lining already in this marketplace. So I'll stop with that. Thank you.
Thank you, Manuel. That was definitely a very good summary of a report, like you said, that has a lot of data and that is very interesting. It's out there if someone doesn't have a copy, and it's already published on our website. As you saw also, that makes the panel even more interesting, as we have some of the companies that Manuel was mentioning. I would like to start with remarks from them. If possible, I'm going to ask Usman, because I know he might have to leave a little bit early, to start us with just remarks in general.
Hopefully not that early. I'll get through these remarks. So thank you for inviting me to come and speak about this issue. The research you guys have done is incredibly important. Anytime I read research on remittances or think about this topic, it's pretty personal for me. My father immigrated here from India, and I remember growing up every month, that kind of ritual of, gathering up the funds and sending some money back to the family that sent us here. And that was not only a good lesson in terms of where I came from, but also in terms of giving back to our community. But when I read this report, I actually thought of a different story in my life, because one of the most interesting things in this report I think you guys did was survey people from Venezuela who are, now refugees in a sense, I would think, many of them, who are figuring out how to send money back home. And you were talking about this in-kind contribution. It's fascinating, and it's a story that I don't think people understand. And it reminded me actually of when I was younger. My parents adopted a young boy from Bosnia during the Bosnian War, and last year I got to go to Bosnia and see the house that the remittances had built for his sister and their kids who are now going to school. And so, as you said, these numbers are important, but the human impact, as you said, is incredible to be able to see that, and the impact that these remittances have on people's lives, I think, is just transformative. So obviously at PayPal and Zoom, it's something that we think about at scale. And when you read the report, you see the section on digital technology, and you see that one of the big benefits has been the lower costs that it offers to people on both sides of the transaction. And obviously, we support that and believe in that. But when I talked to the CEO of Zoom about our product, he said, yeah, the cost is important, but it's actually the time that we're saving people that's really important. And so I went down this path of like, okay, how do we actually measure the time that people are saving? Because most people who are migrants, like my father, whatever, they're working people and they're sending money back home, and finding the time to be able to do that is a bit of a challenge. But then I also read a statistic that 66% of receivers of remittances are also working people. So them finding the time to go and actually receive these things is also quite a challenge. So we ran a survey, and this is going to be coming out in a few weeks. That's, I think, very much in line with what we find in this report, looking at 500 people in the U.S. who send remittances, 500 people in Mexico who receive remittances. And what we did was ask them how long it takes you to actually go and engage in this process. And the numbers are pretty stark. In the U.S., we found on average that people were taking about 30 minutes to kind of go to the remittance location and then, stand in line and go through the process and get back home. And so you can actually put a monetary value on that, because the government reports what first-generation immigrants or immigrants more generally make per hour, and that's their time. It's half an hour that they're spending. So if you use that number, you get about $100 per year that people are spending, in a sense, in their time by going and engaging in this process. And since there were 690 million remittances sent from the U.S. last year, that's like $5 billion of lost time, in a sense, in a dollar value. And the numbers in Mexico are probably even more, stark. We found that on average it was taking 41 minutes for people to kind of get to the location, go through the process, stand in line. And it's interesting, we also did some interviews as part of this process, and you were right that kind of, WhatsApp is increasingly being used even for those processes to say, can you send me the number for the pickup thing so that I can get it when I get to the front? And sometimes the wrong number is sent and you have to go back home and call or something, and there's just problems in the kind of traditional process. So, I think the companies on this stage report that oftentimes if it's direct to bank account, the money is available in a minute, right, or less to people on the other side of the world. So that's 41 minutes, or it's 40 minutes you're saving people. Again, if you use Mexican statistics on what the average person makes, you're talking about over $50 a year that's being wasted, or aggregated out across all the recipients in Mexico, that's $460 million that's going down the drain right now. So the opportunity to kind of grab all that money back and return it to the economy, I think, is a really exciting opportunity of this digitization. And, really appreciate the opportunity to come here and talk about it and kind of contribute to the great research that's already been done in this space.
Definitely the topic of access is key when you're talking about financial services and remittances specifically, since there's a lot of people that this is the only financial service that they actually access, right, worldwide. Akinyi?
Hi, everyone. Well, you can hear me anyway. I have a loud voice. So I work with WorldRemit. We send from 50 countries to 145 worldwide. We're founded by a former refugee, now turned entrepreneur, named Ismail Ahmed. And Ismail understood the issue of, or the challenges facing people sending remittances intimately. He was studying at the University of Sussex. He was having to travel he was picking strawberries to earn money to send back to his family, spending half of those funds on the train journey to London to send money. That's time, that's inconvenience. And so he founded the company to solve those issues. And I mean, even personally, I understand that. I grew up in the DC area of half Kenyan, half Gambian. Gambia's economy is over 20% of it depends on remittances. So it's something that's really personal for me as well. And similar to Usman, can recall those stories of growing up and the time and the expense of sending remittances. I think that speed is definitely one of the advantages on the digital side, speed and cost. So we did some research earlier this year on the impact of what would happen if all remittances were digital. And one of the key things that came out of that is you'd free up an additional 800 million globally for education. That is so critical. I mean, in Kenya, for example, one of the countries we were looking at, it was about over a year of education, additional education, available if you switch to digital remittances. That's on the cost side. On the speed side, over 90% of WorldRemit transactions are authorized in less than 10 minutes. In Latin America, we offer a variety of services. We send to over 20 countries in the region, and it's a variety of services ranging from bank transfer to mobile money to airtime top-up to, of course, cash pickup. And we've seen that, I think for bank transfer, it's less than 24 hours on average for most of the countries we send to in Latin America. For cash pickup, it's instant, as with mobile money. So the advantage that you're offering the sender as well as the recipient is enormous. One of the things that we are keen to do as well is focus on not only how do we connect people to their families, but particularly unbanked and rural populations. There's been this growth on the digital side, but as Manuel alluded to, on the recipient side, it's still predominantly cash. We don't want to eliminate that because we want to give people flexibility and the convenience to receive money in the way that works for them. And we're also really keen as a company to really expand our reach into rural areas in particular. So that's a lesson learned that we've lesson learned from our experience in Africa, which is the majority of our global transactions, being frank. But we're taking those lessons we've learned from regarding financial inclusion in Africa and applying them to other regions, including Latin America. So, for example, in in Uganda, 90% of WorldRemit transactions in rural areas go to mobile money. That's an area of our service that we're really keen to further expand in Latin America, and will be a key focus for the region going forward.
Okay, I agree with everything that have been said here in the panel, but I will also look at the economics, because that's critical. When you do the financial agreements that we have with our partners, the remittance companies, is that it's a lot cheaper to send transactions deposit to account or deposit to a mobile wallet than cash pickup. And the industries, if we like it or not, that's besides the point. It's moving to deposit to account and it's moving to mobile wallets. And you have a lot of companies, to my surprise, in Asia, in Vietnam, in the Philippines, in Africa, that they still use a traditional method. And the companies that are going to survive are the companies that give you the option of sending via, any of our competitors, WorldRemit, PayPal, Zoom, Remitly, and so forth. And if you look, I think the key indicator for me is that when you look at the earnings release of Western Union, the revenue of Western Union is about 600 million coming from westernunion.com. And it's better for the consumer. We're talking about financial inclusion. It's better for the P&L of Western Union. And also it's better for the remittance companies. So everyone benefits. But then you get into the issue of everyone offers the same service, talking that everyone does deposit to account. So the key, if you want to survive, if you want to compete, is that the product has to be second to none. We all offer more or less the same price. We all more or less charge the same FX, ballpark. But the difference is, and that's the reason why I believe that the industry is not a commodity, is on the type of the product. And we were talking about speed. Then you get into the definition, what's speed? Because you get into the definition of legal definition. It depends on the country. But the message to the consumer is that has to be, the transaction has to be instant. Also from a business perspective, when you do from a digital remittance company, like us, the three of us, compliance, we have no problems. None of us has been ever fined. You go to the traditional money transfer companies, it's not their fault, it's just happened, because you cannot control 50, 60, 500,000 agents. From a compliance perspective, when you send via digital, the transaction is almost, I'm not saying that it is, but it's almost bulletproof, because the bank do the due diligence when someone tries to open an account, and we also do a high velocity due diligence on our senders. So it's better for everyone. It's better from the industry, it's better for the consumer, and from a financial point of view, it's better for everyone.
I think that also paints a very good picture of what we're looking at from the digital perspective. And it's very important also to differentiate between the senders and the receivers, right? Because like you said, there's things that are changing on different sites in different ways in different countries. I think the Ghana example is a great one. So I would like to maybe start the conversation regarding exactly that. How do you see these remittances from digital growing? And if you can give us any insights about your client base on the sender side. Is this, new people? Is this younger people? Is this people that are changing? Are things that help to change? For example, policy-wise, I know there's countries that have established, mobile or have policies that promote financial inclusion. Do you see an impact of that? And maybe on the recipient side, and especially speaking about accounts, if you have seen anything regarding financial inclusion. I know Manuel can share a lot on this topic too, but if we can start, with some impressions on that topic. I don't know who wants.
Ladies
first. I can speak about that we're watching closely is obviously this growth of South-to-South remittances, which Manuel spoke about. And this is something that, again, we're taking lessons learned from our experience in Africa and applying it to other regions. A lot of traditional receive countries, as what we call them, that are now becoming sender countries, it will take some degree of education and working with the local regulator in order to be licensed to send from those countries. That's something that we're watching closely and always in conversation with regulators about. So, for example, in the South African context, we were recently the first digital remittance player to be licensed for electronic KYC. That's something that's standard in the Western world, right? But it's something that requires a bit of, I know there's a caveat to that. Well, it's something that's more commonplace, I would say, right? It's requires a bit more education of the regulator in some of these markets. So that's something that we're keen to do because we want to make it easier, not only for immigrant communities in the U.S. to send to their home countries, but as we talked about, Chile becoming increasingly a large send market. How do you make it easier for immigrants in Chile to send home? So that's something that we're exploring and keeping a close eye on.
So, coming to your question on the growth of this industry, I think Jean kind of hit it out of the park that we are going this direction kind of no matter what. And our perspective, and it's kind of much broader than even the remittances space and financial services at PayPal, is that PayPal is not going to solve all these problems, and it's a huge market, and so we have to partner across the ecosystem to make this happen. So, on the cash pickup, because the reality is there's still a good percentage of the recipient side that's vast majority actually that's cash pickup. We did partnerships with OXXO, in Mexico. We did partnership with Ria Money, who's a considered competitor in a sense, also offers remittances services, but they have I think 150,000 plus cash pickup locations. 147. Sorry, I'm a little inaccurate with my numbers today. But I think the most exciting one we did, which to your point about mobile money, was a partnership with M-Pesa, where you can kind of deposit directly into an M-Pesa mobile wallet. And to the extent that those kinds of partnerships build out, that's the way that you can keep everything digital, lower the, I think we raised like the cost, the time, and the compliance. Like all of that becomes a lot easier when the entire transaction remains digital. So I think those are the most exciting growth opportunities in this space.
One is that what we have seen is that the woman that is sending money is more educated than the men. And because of that, the woman tends to use more a mobile device or a computer to send money. The level of education of women, just look at the Filipinos. They're nurses. Where are they? In Italy and Spain. And that's something that we have found out. Also, in regard to the South to South, that's a market that we know that's there. But if we look at the whole world, what are the big markets? Just to give you an example, forget about India, Mexico, and the Philippines. What's next? You have the Indonesia, you have the Vietnams, and so forth. Outbound, inbound. It's very difficult to go into small markets. Small is relative, like Chile to Colombia. What are we talking? 50 million, for example. I don't know the number. But if you look, for example, at the amount of money that's going from Spain to Colombia, well, that's decreasing according to Manuel's report. But let's say Spain to Colombia, it's a much, much bigger market. So the effort is the same to launch a small country than to launch a large country. And what we have seen, like when I travel all over the world, is that if you go to Lagos, Lagos has a section that's a Silicon Valley. It's just like Silicon Valley here. And that's where the startups are coming up, and they're getting into the corridors. Let's talk to Kenya, let's talk about Namibia, Tanzania, and so forth. And talking about Kenya or Tanzania, there they compete with the large regional banks, like Equity Bank, that they give you a East Africa footprint. So it's changing. All these small companies, they're coming up, and they are pretty good companies, but they're focused on a corridor, on a specific corridors, and that's where the industry is changing, and that's where we see the competition.
I just want to follow up on what Jean is saying, because definitely something that is happening in Latin America. And I mean, when we talk about financial inclusion, you're talking about methods to get people into the financial system, regardless of the type of entity behind it. And there are two interesting developments taking place. One, it's what Jean was talking about, in at least in the South-South corridor in the Americas. The leading companies in the money transfer businesses are not the usual suspects. Definitely not Western Union or Remitly or WorldRemit, etc. But actually, they are local, regional corridor-based companies. But they are using the digital platforms for sending money. They are as compliant as anybody else. And so they're simply capturing a particular niche. Now, the one thing is that those companies may grow enough to become robust competitors. And you do have examples of different businesses that started basically out of nothing. You know, WorldRemit is a very good example. but also UAE Exchange started as an exchange bureau, and now is perhaps the third largest money transfer company in the world. Unistream, years ago in Russia, was also, a small bank offering remittances, and it became one of the most formidable competitors. And, Russia, you can say, is not south, but, but you have basically, you have businesses in places where you're not dealing with the upscale industrialized economies. The other thing is that when it comes to financial inclusion, again, integrating into the financial system doesn't necessarily mean getting you into depository banking financial institutions. It means that you can enter through non-banking financial institutions, from microfinance institution to any other of financial entity that has the capability to handle financial transactions, funds of different sort. And we have a project in Guatemala where we have a partnership with the largest telephone provider, Tigo. Tigo has a mobile device called the Tigo wallet. Well, their wallet, their e-wallet, is actually, it's been there and it hasn't been very active in their system. They haven't been growing, but they didn't grow as much as Banco Industrial or Ban Rural, who have their own also digital platforms for receiving funds, cash or of any sort. However, we did a financial advising program in partnership with Tigo, and the conversion rate, that is getting people to use the e-wallet, within a matter of 1 month grew by 30%. And what is interesting is that people are not depositing their money. They're just putting their disposable income into the wallet. And that gets you into another segment of the developing world's market that is part of an untapped world. It's basically the one that doesn't think or doesn't know or doesn't want to use a depository institution to put their cash. But they are walking banks. In our work worldwide, we learned that half of people who pick up the remittances are actually carrying at least $500 in cash before they pick the remittance. So, it is fascinating. Everywhere we work, we have a 30% conversion rate of people when they formalize their savings. And we realize that 30% is only half of the group of people that actually come to a branch with tons of cash. But the thing is, that was a natural market into a banking institution. But now when we're looking at the customer that goes to a Tigo kiosk, is another individual that is carrying cash in smaller denominations, but still is carrying money. You deposit that money into a wallet, and you're actually able to handle your finances in a better way. And we do have actually data also that shows that the moment you formalize your money into the financial system, you're more likely to save over the longer time. So it's just interesting how this digital revolution is actually having an impact on financial inclusion.
It's changing the banks to compete with the Tigos, and you see that in the Philippines, in Vietnam, in Nigeria, and in Guatemala, Banco Industrial to be specific, is that now you can pick up your transaction at an ATM without having a bank account at the bank. What you do is that you input the money transfer number, you input for compliance reasons, and you input your national ID. And if there's no national ID, some form of ID that, we have to agree on what is an acceptable ID, and then they can withdraw the money. And then the companies are competing head-on with the Tigos, head-on with the M-Pesas, because M-Pesa has been very successful in Kenya. I was working in downtown Nairobi. I was the only person using cash. I think that I was the only one. But how do you compete with them? You give the option. And also the fees that they charge are much lower. At the end of the day, you have to look at the P&L. How you can make it more profitable for the both companies, and also what's best for the consumer and the financial inclusion.
One thing I would add to the earlier one thing I would add to the early discussion, though, is it's no secret to people in the audience that remittances are undervalued because a lot of them go through informal channels. So as much as we talk about the South-South as well, and of course, what Gina is saying in relation to, some quarters are smaller, a lot of quarters are also very undervalued. So one classic one in the African example is South Africa to Zimbabwe. If you look at the World Bank statistics, it cannot be correct. Anyone who knows South Africa would know that. It's in the billions. So we're looking at that as well. What is the gap between the official statistics and what we know must be true?
Company, them, Mama Money. Mama Money controlled that corridor. And I remember once that I was talking to a former senior executive at MoneyGram. We just were talking. And he said that when you compete, you don't compete in the U.S. to Mexico. You go and compete on those corridors because then the revenue per transaction can be much higher. And there's less competition.
And this is the expert panel. Thank you so much. Just want to underline one more thing, and it's about the fees, because even in the Guatemala project, we've also seen, even among financial institutions, one of the entry barriers that differentiates when people open accounts and when they don't is the cost, of course, and how you're able to tailor to these populations in order that they can be included. And this also broadens to other products, as insurances and other financial access products that can definitely help them build assets and thus, better their lives. I do have a couple more questions, but I think it's important to open it first to you guys. So if anyone has questions, we can do 2 or 3, then go back to the panel. Does anyone? And you can have comments. You don't have to address them as questions. Just try to make them brief if they're comments.
Thanks. I'm Mark Cohen from Oxfam. So I have some questions about your Haiti case study, Manuel. First of all, so your figure on page 6, I think it is 4, on Haitian migration to the Dominican Republic, it's continued to increase through the period you show, but the rate has slowed greatly. And I wonder how much of that is due to the decree of 2013, which actually is reversing the flow of Haitians out of the Dominican Republic and back home or to elsewhere. And how is that affecting remittances? And what is the vehicle for, because you also show that the total level of remittances from the Dominican Republic to Haiti remains, I think, the second largest pool. What is the vehicle for that? It used to be literally vehicles. I mean, people on buses with suitcases full of money, but has technology had an impact on that? And the final question, you show that remittances have continued to grow quite steeply in Haiti, about 39% of the economy, if I read the table correctly, and about 39% of that 39% is coming from the United States. Do you have any idea how much of what's coming from the United States is from temporary protected status holders? Because that could also have a big negative impact on Haiti if TPS is ended as some would like. Thanks.
Hi, my name is Lope. I work at the IMF as a research analyst. I'm working on a research paper right now on remittances, and just more broadly from the private sector guys, I wanted to get your feeling on how accurate the official statistics are on remittances. What has been, if you guys have any kind of private sector forecasts and estimates of what remittances are, how do they differ from the official numbers?
It depends on the country. Like we were just discussing one particular country that is not in the report, or even in the first table, and that's Guyana. There are 500,000 Guyanese in the world, Guyanese migrants, in a country of 650,000 people. So there are practically as many people abroad as there are inland. And my estimate is about 200,000 minimum transactions of remittances to Guyana. That gives you at least $500 million. The official statistics talks right now about 100 and something million, maybe 300 million in a better year. And it tells you that there are methodological problems in how they measure remittances that have to do with, I don't want to say technical capacity of the central bank. I've been working with the Central Bank of Guyana since 2001, trying to get them to realize, that money comes in. But one of the methodological challenges they have is that there is a cultural aspect to sending money for many, what I call English Caribbean countries, including Guyana. And that's the use of barrels. These tons of stuff that you put in there. And to me, it was alien when I discovered it. But within that, there is cash. And that's something that the central bank is unable to measure. So there are discrepancies in there. Then there is another issue that sometimes central banks don't have the means to estimate, and is that a lot of remittances are used as part of intra-firm and intra-business trade settlements. So Guyana is another good example of that case, that where you see the decline in the growth of remittances to Guyana not being attributed because migration has slowed down or because less Guyanese are sending money, but because there are trade settlements going in and people are sending through other means. So that's a good example. There are other countries where you can discuss some of the methodological statistical differences, but that's a good example. Chile is perhaps another case that the Chilean government will realize soon that their balance of payments metric is not capturing all of the flows that are leaving Chile, and the flows that they are reporting as remittances include private donations from foundations, for example. So there is always a margin of error. How big it is, it depends on the country. Like, your model countries are Philippines, El Salvador, Mexico, where we actually they produce municipal level data of remittances going in, and you can actually we've been measuring migration through remittances to determine where are people coming from, and you get interesting stuff. On Haiti, half of the flow comes from the United States, and it definitely will have an impact with TPS. The way the impact will be is that I don't think, in our experience, doing our research on Central Americans on TPS, is that they are not going to return. They're going to stay underground, and in return, they're going to continue sending money. But if we look at the income levels of those without papers, they're basically ending about 20% less. So they're likely to send a little bit less than those. So you will see a registered decline in that for Haitians. The problem is, of course, is more magnified by the fact that Haiti is definitely a textbook case of a failed state. And it's our Somalia, with all due respect to, to Somalis, because I think Somalia is actually doing better today than Haiti, unfortunately. But so it will be magnified by that impact. The second thing is that definitely the 2013 law affected migration. There is less mobility from Haiti to the Dominican Republic, and I don't know about the return, however. When we looked at it, we don't see that there is a massive return of Haitians to Haiti, that they're just staying the same way as you were on TPS, and now you are more exposed to being vulnerable to deportation. But the one thing is, with the chronic crisis that Haiti has had since 1993, and it's very likely that it will continue that level. I mean, we've been measuring Haitian political stability trends, and we figured that this is a country that every 3 years goes into a deep political crisis. prior to an election and after an election. They go into these major turmoils. Migration will continue to grow and sustain the country, but the sustainability to the country is just a humanitarian issue now. It's not an economic growth issue. The vehicle for remittances from the Dominican Republic to Haiti, it's mostly informal. It's a vehicle. Yes, that's right. I mean, we tried many times to work with different companies to get them connected. Like we work with Foncose in Haiti and with Caribe Express and La Nacional and Banco Unión with Armenteros, and it was impossible to do it. You know, it's impossible because transaction costs, operating costs are expensive. And so still the market is dominated by two companies in Haiti, and that's the two banks, Sojibank and Unibank. And they are the only ones that have the platform that can be sustained by a large financial institution. But other than that, you cannot operate financial transactions in a country like Haiti because you have to keep electric plants running, and it's just too expensive. Too expensive. So people continue to use the informal means.
Your question, we use the data from the World Bank as directional. That's what we do, because like in the case, for example, of Ethiopia, according to the World Bank, it's 500 million. Every time that I go to Ethiopia and I ask the same question to different people, they say that's about 6 billion. So where's the number? And I'm talking about the large banks, Awash and Commercial Bank. So, and the same thing happened with a lot of countries in Latin America, but like Manuel was saying, how do we know that Michoacán is the #1 recipient state in Mexico? Because we have the data from the Mexican government. It's country by country.
Yeah, I'm going to tell you one country that I am certain. I want them to invite me to go and discuss it with them. No, Cuba, I mean, there is no statistic in Cuba that the Cubans are too smart to tell you how much they depend on. I mean, Cuba is half of the economy is run through remittances, but it's Nigeria. Nigeria, it's impossible that is receiving, that households are receiving the equivalent to $16,000 a year in remittances. It is nearly impossible. The Nigerian diaspora is not that large, number one, is not that wealthy, number two, and there is a serious problem how they are measuring. And with respect to my colleagues at the World Bank, why are they not even, taking this issue seriously? They should, because there is a lot of noise in that number. The volume of remittances to Nigeria is at most half that figure, at most. Yeah.
Nigeria. In Nigeria, they give a number about 20. CBN, yeah, Central Bank of Nigeria, yeah. So the numbers are all over the place, all over the place. We use the median, the half point. But it might be right, it might be wrong, we don't know.
Directional is a good way to put it. Akinyi, you want to? Directional is the way to put it. It kind of gives you your North Star, and then you based on local partners, your knowledge, research, then you make an informed decision about what it really should be.
And do you guys think with like digitization of the process, these numbers are going to become more accurate because they will be recorded in the official system?
No.
Straightforward.
No, it has nothing to do with digitization. It has to do with competition. The more competition you have in the system of businesses like this, whether they are cash-based or digital-based, the more likely you'll be to record the transfers. But it always depends on what the methodology you are using. What's happening in Nigeria is that there are many companies that use Western Union, for example, to perform business-to-business transactions. And so that inflates the volumes. If your methodology is very inaccurate, at filtering this type of transactions. You are basically putting a lot of apples into, a grape basket.
Just to add, and because they're very interesting cases, for example, the role that the central bank plays and who it engages is also very important. If you see Jamaica, when they passed the new law for example, registering of remittance companies and the way they get the data now, following, for example, Costa Rica and Panama, they start making those changes, they do get the remittance companies engaged in the reporting of those numbers. And central banks that start doing that usually have better numbers, and you can actually see the changes in the last 10 or 12 years in these specific countries, which is very interesting.
Hi. Good afternoon. My name is Walter Tejada. I'm at Tejada Consulting Services. My question has to do with the type of ID that anyone would need to use one of your services or in general. And the focus, particularly from initially from the undocumented population in the United States, but it actually can affect other areas as well. And then, Mr. Orozco mentioned in his statement backed by his study that there's a negative Central American population growth in the United States. That's contrary to the political rhetoric that we hear about caravans and invasions and all kinds of stuff. There are a lot of concerns that if the 300,000 or more recipients of holders of temporary protected status actually end, it actually ends. You never know what happened in the 2020 election, all that stuff, but then we'll have a larger population, undocumented population, and some driver's licenses, which are typically used as primary identifications, may no longer be valid, and so on. What type of flexibility can you share? Because I hear this all the time from different people that they wish they were not asked for a driver's license. Certainly here in the United States, perhaps in other places there are other types of ID. But could you comment on? It's understandable the security concerns. We don't want to open a door for money laundering or terrorists and so on. But notwithstanding that, what is the technology doing to accommodate folks who are humble and everyday hard worker and people that want to use these services, may not be techies, but they're willing to try a smartphone to try to help them in their life in rural areas or wherever they may be, or certainly here in the United States in the different areas.
We'll take the question first.
Good afternoon. My name is Scott Morgan. I'm an independent security consultant. I do a lot of work in West Africa, so hearing Nigeria, you keep ringing the same alarm bell that I keep hearing. But I also have a friend of mine who's actually in the work of setting up an online app. He just finished working in Senegal, and he's now going into Mali, which is a country I work in. So that's a conversation I would love to have with Manuel. But going back to your data points, there's a country which I also keep an eye on, which you did not talk about. What about Suriname?
We're responding? Or we're taking another question? I do whatever Laura tells me to do.
Yeah, I had a quick question about the traditional walk-in remittance locations. Oh, hi. My name is Nelson Irizarry. I'm from a company called PayQ. So one of the things that I found interesting, you cited the Western Union where they have relatively flat growth. But if you look at, for example, Intermex, which is a public company, and we work with a lot of the I would say the mid-tier players, a lot of them talked about banner growth last year. 20, 30%. The numbers for Intermex are quite similar. So I was just wondering, two questions related to that is, one, who's losing, right? So digital is growing, and you have a lot of these mid-tier walk-in retail networks that are growing, and we've seen it in our numbers because we work with both. We've had really strong growth this past year with digital, and we're seeing it also in the walk-in environment. And then two, where do you see the walk-in retail environment 10 years from now? Is it kind of getting its last heyday before contracting, or will there be a lot of contracting within the network? Or do you think that it'll have still a significant role as an outbound perspective, and again, focusing on the U.S. 10 years from now?
I'll try to comment on the first question about what can technology do to help people who lack a formal identity card or document. Unfortunately, not much from my perspective. Like it needs a lot more than just technology to be able to solve that problem. Because there are laws that are in place to require a lot of these entities to do upfront checks on who these people are, and they often require a formal identity document as part of that law. Nobody's going to sign these people up. So hopefully there's, you talked about KYC and you said, in the Western world that exists. It kind of doesn't actually in a lot of Western countries. So, digital identity documents don't exist in a lot of Western countries. Digital verification of those identity documents don't exist. So there's a role for technology, of course, in that space, and identity is a huge space for innovation. But there's also this underlying regulatory / policy, set of issues that would need to get resolved. And hopefully technology is helpful to that because it can provide more certainty and make it so that policymakers feel more comfortable in making some of those changes and decisions, but it probably won't happen by itself.
I think I could offer a different response. At least for the U.S. outbound, the Patriot Act gives the discretion to the business to determine what constitutes a proof of identification, a valid proof of identification. So the headquarters of a company can determine and give to the first mile entity that enrolls you into a digital or into a cash-based system what will constitute a legitimate proof of identification. So valid ones are driver's licenses. So if they expired, it will be up to the discretion of every state to determine if they can reissue them to those people with an undocumented status. But the actual discretion is quite ample. The critical issue for a business is to determine the KYC status, know your customer status, vis-a-vis financial crimes. So the more people you actually enroll into your system, the better the redundancy and the accuracy in preventing financial crimes will be. And so I'm not so worried about the challenge in terms of identification. And I think businesses will find their way around to secure risk mitigation measures on KYC and maintaining their customers in that segment. Especially the one that lost will be in the system anyway, so it's already KYC kosher. But those who will be newcomers, well, the irregular migrants, they find a way to provide a legitimate form of identification. So, but yes, the challenge will always be there. And that question takes you to where do you see the businesses, 20 years from now, the cash-to-cash business in 20 years from now? If we make a projection from what we have seen from 2005 to 2019 or 2020, we see a growth from a market share participation from 0.5% to 20%. What is interesting is the exponential growth that occurs basically between 2015 and 2020. Is a substantive growth that is not even from 10% to 20%. It's from about 8%. I think our study in 2016 showed a 7% participation of internet-based transfers. And now we see it is somewhere around 20%. So if that exponential growth is your main base to make the future projection, we're talking about 50% in 50 years at least for digital transactions. If the speed is even greater, we will see at least 70%. But the cash-to-cash business is not going to end. I think it's going to innovate by using hybrid models. And this is something that is occurs in several countries, like in Africa, for example, in Europe to Africa. So that's one thing. And in terms of the who is losing, I think, the immediate answer will be Western Union is losing. But actually, I think that's not the case, because I think Western Union is winning within his own market, within his own customer base. They are shifting their cash-to-cash clientele into the digital clientele. And that's where I see the growth, especially in Latin America. There are other businesses that are losing, and several have closed down. So that used to have, at least 200,000 transactions a month, and they couldn't. Today, you cannot be at a breaking point if you are not making at least 100,000 transactions a month as a business. And so there are quite a few businesses that actually got out of the market because they couldn't stay afloat. And I think those are the players that are basically being captured by these markets. But the taking away, to some extent, is not very large either. I don't think it's more than 10% of all from the US, we estimate about 17 million transactions to Latin America. I don't think more than 2 million people are being taken away from one business to the other. It's mostly that customers are sending more money back home, and that's where you see the growth. On Suriname, I have made several attempts to work on Suriname. It's just very difficult. It's very difficult because Suriname is more looking towards the Netherlands. And except for meetings at the Organization of American States, we don't see them counting themselves much in the Americas. So it's a silent country. And I have tried to measure remittances there, and it's just an impossibility. The one thing I know is that the diaspora, the Suriname diaspora in the Netherlands, is mostly a settled one. That is, it doesn't have much connections to Suriname. They are pretty much disconnected in the conventional diaspora way, that you have a sense of belonging and you materialize that belonging by doing something back home. That second part, it's not that large. There are several Suriname organizations in the Netherlands that are relatively active because they get subsidies from the Dutch state. But other than that, it's actually quite a mysterious place.
Well, Suriname, I have been there a couple of times when I was at Western Union. Like Manuel was saying, it's just from the Netherlands to Suriname, but it's a very small market. So what is the acquisition cost for each customer? What is the lifetime value? Where are the profits? And they only have two companies there, Western Union and MoneyGram. Nobody else. And Western Union is via Grace Kennedy. That's their agent in Jamaica for the Caribbean. It's very small.
Questions? So maybe just to end up and wrap up our panel, I think it will be nice to hear from you what you expect from 2019. I know part of the report talks a lot about, the fragile countries and how they don't seem to be getting less fragile during 2019. And in general, even product-wise, or what are the expectations for 2019?
Maybe I'll go first because I'm getting a lift. I mentioned partnership, and I'm hopeful that partnership continues to be the way that this develops. One of the most interesting stats I saw recently was from GSMA, where they've developed a lot of intra-corridor kind of remittances within Africa that are like 1%, 2%, like 10x below, or if that's the right way to consider it, what the average cost is. So, like, if our providers can plug into some of those, that's game changing, because you can extend their networks tremendously. So I'm hopeful that that continues to be the trend that you see in the space. And thank you again for inviting me, and I'm going to run.
I think that the industry, there will be consolidation in the industry. And the other issue is de-risking. If the companies don't have the right compliance, they will go out of business. It's that simple. You need to have strong compliance controls in order to be able to survive in this industry.
To be honest, I don't have much to add beyond that. The one thing I would say is, as Gina alluded to earlier, with prices, you can't really compete that much anymore. It's about the product. And so I think that that will continue to be a focus. How can we improve our products across the industry, not only just as WorldRemit?
I think we'll definitely see continued growth as in this year, as in last year, particularly on the digital market and intra-regional flows. We may see a slowing down of remittances from the Northern Triangle and Mexico, in particular, given the conflictive situations that things are happening in the United States vis-a-vis anti-immigration sentiments. But other than that, we'll probably see more or less of the same growth.
Thank you so much. Thanks to our panelists, and thank you for joining us. And we'll see you soon again.